the data shows that European investors are back in a risk-on mode. So you see strong flows into equities, but they still do not buy the domestic equities. So the category with the highest inflows is equity global for the year. It's followed by the equity sector information technology. Then we have mixed assets, the long beloved asset class in Europe, so mixed assets, Euro flexible, with roughly 14 billion of inflows. And then we see equity China and the equity alternative energies. And this is really a theme that is driven by all the discussions around climate change and sustainable investing.
You know, we're talking a lot about the rotation that we're seeing, which is quite vicious at times. Supposedly, the fear of inflation and higher interest rates is driving people back to cyclical stocks and away from growth. Do you see that same trend emerging in Europe, given the paucity of good tech businesses to own in the continent?
Well, what you see in the continent, or on the fund level for the continent or the European fund buyers, is not really a rotation which you see on equity markets. These trades are mainly caused by the fund managers and other professional investors. So as said before, the investors try to buy widely diversified portfolios and really try to get exposure also in the rotating sectors by the help of fund managers.
Detlef, can I ask you about the sterling trade? You've mentioned the outflows that took place in April. And if you look at the sterling trade over the same period in April, it was a choppy to flat trade. But then what we've just saw in May, a fairly monster trade, a fairly significant bounce for sterling. And at the same time, it's been a slightly challenging month on the FTSE 100. So what are the correlations here? What are investors doing when it comes to UK assets?
Well, I mean, the UK assets in our statistics are mainly owned by UK investors. So you see that UK investors are still buying into their markets. And if you look on the flows on the money market side, yes, you are absolutely right. We see outflows of 33.6 billion from money markets in the British pound. On the same time, we also witnessed outflows from the dollar and the euro. So I think that these flows are bringing the high inflows from last year back to a normal level. So we see a move out of money market into more risky asset classes.